Hello everyone, welcome to the Road to the Millionaire Retirement. My name is Andrew and thank you for checking out this channel and this video. So in this video, I'm gonna go over two companies that I would like to buy for the sake of the dividends. I figure since the last video I talked about was dividends and just about buying prior to purchasing a dividend stock, I figure you know what, there was stocks that was under my watch list that I wanted to buy. So today I'm gonna talk about those two companies. The first one, the first one that I was interested in purchasing is the real estate sector for a name called Bce Properties Incorporation. I'm assuming that's what it usually stand for. Okay, so let's go over the dividend yield. As you can see here, the dividend yield is 4.66, which I believe is above average. Like for me, by my standard, I would say the average for dividend yield is like 2 to 3%. So if this 4.6 is definitely high up there, and that mean that so they pay quarterly, and that come out to be 33 cents. That's not too bad because usually, I mean, with this price range of $28, I will buy like a 100 share. So I'm looking at $33 per quarter. So that's not too bad, $33 for that amount. Looking at this company, let's look at the 1 year growth. Maybe not 1 year growth because this is the whole COVID year, so it's not very accurate in my opinion. Or look at 5 years. So, oh, okay. So this company came out not too long ago. It's like 2017. So it's like 4 years. The chart doesn't. It had a potential of growth until the COVID happened, and they just like dropped more than 50%, and it bounced back up. So it would have been nice, I guess, if you guys purchased it, or if I purchased it during the COVID spike up. But I mean, I think this company has a good possibility of slow and steady growth. The next we're gonna look at is the dividend raise. So we can see here that, I mean, like we saw before, this is 2017, so it's still pretty new company that start paying stock, and they start paying in 2018. So they started with 16 cents, 26 cents, 28, 28, 29, and 33. So they are increasing every year, and even during the COVID crisis, they continue paying. So that's a good sign in my book. Okay, now we'll look at the key statistic. Okay. Alright, so the market cap is 15 billion, which is above what I would like with the minimum of 2 billion. So that's good. Profit and earning is 20.66. I believe from what I heard, like anywhere from like 10 to 15 is good. I have like no knowledge about profit and earning. So please do excuse me, but maybe you guys want to research that on your own to find out exactly what the number mean. What the number mean to the company regarding profit and earning. Alright, going down, price cash flow. This entire section on price cash flow and the price cash. These price sales, I'm not really. I mean, I don't really know what they mean exactly, so I usually don't look at this chart. But earning per share growth. Last quarter versus this quarter, same quarter prior year, 138. So I'm assuming with the comparing to the COVID quarter, obviously there is a great gain. So that's good. The TTM is trailing 12 months, I believe. So I'm assuming like this is how the EPS has been doing the past 12 months. At negative 3.52. I don't think this is bad considering maybe their expectation of EPS was low because of the whole COVID. But then again, real estate has been booming, so I don't know exactly how this whole thing is calculated. But if you guys see on the right side, they have a average for this sector, and it's like only 0.24 percentage. So I mean, like almost 4%. I guess, I'm not sure if that's gonna affect your decision too much. I mean, at least it wouldn't affect my decision too much. Let's see, forward earning per share. There we go. So projected earning per share growth. It's pretty low, at least compared to the average one, but it's a plus side. The revenue percent change is a lot higher than the average. Earning percent change for trailing, or I'm just gonna call it TTM. That's also a lot greater than the average. Revenue growth doesn't have any number. Book value per share, I don't know what that means. Sorry guys. I'm not a financial advisor, so I don't know every detail about it. And I'm just a guy who's been learning as he goes. Gross margin, la high is I mean it's a plus. It's their high percentage, so I'm assuming these are good things, especially like profit margin. I mean operation margin, pre-tax margin. I mean they're a lot higher than average. Well, hopefully these mean that they're usually good things. Okay, now the return on equity, 17%. That's good. Return on asset, that's also pretty good, at least compared to average. And return on investment is also higher than average. So this is really how should I say this? It's very comforting, based on comparing to the average. The debt. The debt isn't that bad. It's less than 100%. That's a plus for me. Even for the total debt and debt on equity, they're not crazy as the average size. And lastly, the payout ratio. So the payout ratio, if you guys seen the last video, I told you guys that payout ratios are usually the company pay their dividend from whatever earning that they have made, or the money they have made. So this company spend 92% of them paying out in ratio. So there's a good chance that this is pretty risky as far as like the dividend paying. Don't know if they'll be able to continue paying that amount. We'll have to wait and see. But considering the amount of price, and if I do buy 100 share, it'll be 2,800. It's gonna be for me that's like small, how do I say this, small portion of my 100,000 portfolio. So spending almost $3,000 is gonna be worth it. And like I said, I'll be getting $33 per every quarter. So I think it'll be a good risk investment for me. Alright, the next one is gonna be Bce Incorporation, which is a communication service. So I'm assuming it's gonna be like Verizon communication service, but I never heard this before. But anyway, let's go over the dividend yield. The dividend yield is 6.36%, which is extremely high, which means you might be a little bit careful why it's so high, because there are dividend company out there that has a high dividend yield, and its purpose, like, this is based on what I believe, and I think they have such a high dividend yield because everything else about the company is not great, and the only thing appealing is the dividend yield, and that's how they will want the investor to come and buy their share. So I mean, so this is very high, and we'll just go over all the numbers that we went through with the previous stock. All right, so we'll look at the 5-year. So looking at the 5 years, their company, how should I say, a chart, I guess, is very linear. Like, they haven't really grown or anything, and yeah, it hasn't really gone anywhere. I mean, it hasn't really gone down other than this COVID drop right here, but it hasn't really gone up either. We'll look at 10-year. 10-year, yeah, so for the past 10 years, their company has been pretty much still. Like, it hasn't really gone anywhere up crazy, hasn't really gone down crazy. We'll look at max. Let's see how that goes. Yeah, I mean, their peak previously was at 2007, when I guess, like, beginning of the financial crisis, and during the financial crisis they dropped, they went down like 50% from 40 to 20. So I mean, they recovered from that, but after recovering from that, they haven't really gone anywhere. So if you're looking at the company for growth potential, this company is definitely not it. but we'll continue looking at the rest of the numbers. Alright, so this dividend pay 88 cents per quarterly, which is a lot, and we'll look at their record. Alright, so dividend detail. So they have been paying at least for past 10 years. If you want to know for how long, we'll have to use different websites that keep track of the company's dividend. But I'm just gonna stick with the last 10 years for now. Alright, so starting at 2011, they were paying at, we'll round it up this time, 52 cents, 54 cents, 2013, 58, 62, 65, 68. So the company has been continuously and consistently paying dividend. Even during the COVID, they haven't dropped or freeze the dividend pay. So that's very comforting. Maybe if we were to look at the financial crisis in 2008 and 9, maybe they would, maybe they done the same thing. You know, they have been continuously paying. So that's good for me in my book. Alright, let's going down to the key statistic. Alright, so starting from the top, we have market cap of almost $40 billion, which is more than the minimum of $2 billion, which is good in my book. I'm just gonna skip the entire rest of the evaluation. You guys could just look at it if you guys are the people, if you guys know what, you know, each of the profit and earning and all that good stuff mean, and what the number represent. Growth, EPS growth is in the plus side compared to negative on average. EPS growth for the 12 TMS and the prior TTM, it's a negative, and which is bad because the average is a plus side. And I just let you guys look at the rest of them. Then we'll go down to the profit margin. It's missing about half the information, but at least it's not negative, which I feel is relief. And the last, well, it's not last, not yet. Okay, so returns on equity and asset and investment. These are all these are pretty high, at least compared to average. So that's good in my book. And going to the long term. Okay, so the long term, they're at 140%, over 100%, and the total debt and the total debt on asset and equity is also pretty high. So I would say these are a little concerning, especially with the payout ratio is over 139%. So this. If I were to choose to, I mean, I am still thinking about investing just because they have such a good record of paying dividends, and you know, it is very risky investment for me. I might buy 50 shares, because if I buy 50 shares, I'll be getting $44 per quarterly. I might buy 100. We'll see, because they are, like I said, the dividend really attracts and really screen my name, and I'll be spending almost $5,000. And yes, 5,000. I mean, well, it's 4,300. You know, 4,300 is a lot more than the previous stock, but it's still not that bad compared to my entire portfolio. And I feel like, you know, if I were to buy 100 share and getting $88 quarterly is really good dividend. I mean, passive income for me. So that's why I have this on under my watch list and keeping my eye on it. I mean, because if we look at AT&T and the AT&T's numbers, like payout ratio is negative 277. Like, I don't know how that works. I have no idea how the payout ratio could be negative. Like I said, I'm not a financial advisor. You know, I do this learning as I go, and learning things that I want to learn. And I haven't researched how the payout ratio could go into negative, and on top of that, it's at 277, which is insanely a lot. And compared to like the total debt percentage, you know, they're not that too crazy compared to the BCE. Yeah. So, and going up, like returns on the AT&T is also pretty bad. I mean, so this is at least better in number wise compared to BCE. But then again, like if you compare AT&T number with anything else, it's gonna be better. So, but I'm gonna keep my eye on this. I think this might be a worth risky investment for me. So yeah, I just need to make sure what shares I'm planning to sell, because if we were to buy the amount that I want to buy, that's like 3,000 from the previous stock and 4,300 for this, so we're looking at 7,300. And the only thing that that I'm willing to sell from here is Neo, which is sitting at 2,500, and maybe I'm thinking about buying Apple. I'm thinking about selling Apple because Apple has been doing terribly. I don't know why, because they released with the new Apple phone, and I thought that was gonna really kick them off, but the Apple has been pretty disappointing in my book so far. So I don't know. Maybe I'm willing to sell the Apple. That will give me $12,000, which give me a lot of power to buy a lot of stuff. But we also have the my risky investment, Blackberries, AMC, and Nokia. If I were to combine all of these, we're looking at like 3,800, give or take. So I could do that, but I haven't put any trigger yet. I haven't been really thought too much into it, so I'm gonna wait and see. Just looking at these negative returns, it make me want to hold on to it to make sure that at least I make even. So that's gonna be it for this video. I hope you guys enjoyed what you saw. So these are the two stocks that I'm planning to purchase if I could pull the money out of my Roth IRA somewhere. If you guys have any question or comment, you know, text those below. I'll answer any question or reply the comments I can. Good luck on this week's stock, guys. It seems like it's doing. I know it started pretty rough Monday, but I think Tuesday it kind of went neutral, and today seems to be doing a little bit better. So hopefully this week's ends strong. All right, take care, guys.